Trading gaps method 2. Trading gaps method 2. Trading gaps method 2 is a trading method for trading a continuation gap. Now the question that trader will ask, what is a continuation gap? When and where a continuation gap is likely to take place. So the first challenge for day traders and swing traders is to identify correctly the type of gap we are dealing with. Is it a continuation gap? Is it an exhaustion gap? Is it a breakaway gap? So a trading gap method 2 is a valid gap trading for trading the continuation gap. So if we identify a continuation gap, we will apply trading gap method 2. What do we look for? We highlight the beginning of the gap and the ending of the gap. So you can see that the stock, a MAT stock, Epic Alpha Mike Alpha Tango, listed on the NASDAQ 100, a MAT Material Incorporation, gap up from this point, the green horizontal line, to the turquoise line. So let's move this line. So here, on this day, the stock close here, a MAT stock close here, all right there. In fact, this is the end of 30th of October 2014. The stock closed right here, okay, right there, okay. It's a doji. The closing price is there. So we draw the line there where the gap has started from. It started from the closing price. So the following day, the stock gap up. So the opening price of this candle is the ending of this gap. It's a bullish gap, okay? So the opening price of this candle here is the ending of the gap. So we draw another line there. The next step, we apply Fibonacci extension to the gap. Not Fibonacci retracement, but Fibonacci extension. If you want to know more about Fibonacci extension and Fibonacci retracement, go to www.dayprotraders.com and click on the web page Fibonacci retracement and Fibonacci extension, so you may understand clearly, okay, what are we talking about, okay? If you want to know, watch videos about Fibonacci retracement and Fibonacci extension, subscribe to Day Pro Traders YouTube channel. All right. So now we're going to apply Fibonacci extension to the width of the gap. So by the way, let's clarify what is the width of the gap. Is okay, the size of the gap, okay? This is the size of the gap, okay? Gap up from here to here. This is the size, this is the width of the gap. So now we apply Fibonacci extension to the gap, okay? Extension to the gap, all right? If you don't know how to draw Fibonacci extension, all right, go to dayprotrader.com. So we apply Fibonacci extension to the gap, and we highlight which level? The 138.2% Fibonacci extension level. I'm going to call out that level into pink to please the beautiful ladies that can trade like a pro. Ladies can trade better than men. All right, I'm a bit jealous about ladies, all right? So here it is. Now we have it. I'll remove my line, so you see now. So this is the beginning of the gap, the green line. This is the ending of the graph, the turquoise line. And the pink line is the 138.2% Fibonacci extension of the gap. Talking about trading gap method 2, if a financial instrument gap up, all right, and it is a continuation gap, the best place to buy is above the 138.2% Fibonacci extension level of the gap. So here, as the stock gap up from here to here, we draw it that day. So on that day, the stock went up and closed somewhere here. And then the following day, it did this. And then the third day, you see, it came to retest the level of 138.2% Fibonacci extension level of the gap. What we are looking for, my friend, let's be clear about this. We are looking for a trading setup on or near the 138.2% Fibonacci extension level. If it's a continuation gap, all right, the stock will continue to go up without filling the gap. So you see this gap here is not filled. Price did not come back into the gap. This is a typical characteristic of a continuation gap. It did not fill it. But also, there's a high chance, if it's a continuation gap, that the price will find a support on or near the 138.2% Fibonacci extension level of the bullish gap. If it was a bearish continuation gap, there is a high chance that the price may find a resistance on or near the 138.2% Fibonacci extension level of the bearish gap. This is about trading gap method 2, a trading method for trading continuation gap. We highlight the beginning of the gap, the ending of the gap, and the 138.2% Fibonacci extension of the gap. If it is a continuation gap, very often the price will go above, okay, the 138.2% level. If it is continuation gap, it will go above it, break above, and will find a support somewhere on or near, maybe even come a bit by below, somewhere near this region of the 138.2% Fibonacci extension level of the gap. Look, he went above it, and then pulled back, and then start going up. Look at this bullish candle here. But look at this day. It was bullish, you see. We can use this method for day trading, and also for swing trading, and also for position trading, when a stock gap up, or gap down, or a currency pair, or a future gap up or gap down, ETF gap up or gap down. This is the method for trading a continuation gap. So here, we do not just buy because the price pulled back near the 138.2% level. We do not assume that the price will definitely find a support here. This is not an exact science. This is a high probability trading method, all right? So here, as it pulled back like this, we will say to ourselves, okay, this is exactly what George was talking about. This is a bullish trade setup because this is a continuation gap. Price pullback and retest, there's a high chance you may find a support here. But in order to control the risk, we will use what we call a top-down trading method. Top-down trading method, okay, to trade it, okay? Top-down trading method, okay, to trade, okay, this bullish trade setup. So we are on a daily chart. So we pull back like this. We say, oh, this is a bullish trade setup. Okay. We go to the hourly chart. We wait for the signal. And we can use 10-minute time frame for entry. Multiple time frame trading method is one example of a multiple time frame trading method. Here it is. It pulled back. We apply top-down trading method. Look, stock went up a bit, but look, it pulled back again. So look, it's not straightforward. Blah, 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 blah. You say, oh, John, what are you talking about? Blah, blah, blah. But look, it pulled back again for the second time. Touch again the 138.2% level, and since then it's just a goodbye. It's going up big time. You pull back again, goodbye. This is one example, a typical gap trading method for trading continuation gap. It makes sense? It is also powerful. So what do you need to do from here? So you watch this video for the first time, you say, John, this is very interesting. I'm interested in this subject. Okay, next step. Use a demo account. Practice, or polish first your top-down trading method. Understand that this is a trading setup when a stock finds support on or near the 138.2% level after a continuation gap, and then use a top-down trading method to trade it. Remember that we are trading first the market, then the sector. This is about a trading triangle. All right. If the price, so the 138.2% Fibonacci extension level, this is our warning line. If you dip below it and find a resistance, don't fight it, my friend. Flow with the market. You see here, blah, 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 blah. And then suddenly it's going up. And it's going up big time, all right? This is a trading method, okay? Trading gap, method 2 for trading a continuation gap, all right? It takes some time before the price came back to fill the gap, all right? If you like this video, please give us the thumbs down. Give us the thumbs up. If you like it, give us the thumbs up. If you dislike it, we want to know. Give us the thumbs down. Okay? Don't worry. Give us the thumbs down if you dislike it. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, all right, hit the subscribe button so you can stay tuned and watch more tutorials like this. So you may say to me, George, what should we do when the stock gap down? The same scenario, Suppose in this case, okay, the price gap down, and it is a continuation gap, all right? So the question you are asking, where and when do we have a continuation gap? I will refer you to our Day Pro Trader YouTube channel. Search for gap trading video by Day Pro Traders YouTube channel, and you will see videos, and I will be talking about explaining to you, okay, the different type of gap, how you can recognize them, where and when do they appear. I can tell you now, continuation gap for traders that understand area way usually will take place during the third area way. One example, okay? You want to understand when and where the continuation gap takes place, so you can identify clearly what is a continuation gap. Continuation gap, the number one factor of a continuation gap is okay, strong economy news or strong bearish economy news. So strong bearish economy news will propel the price down, we push it down. So we have a gap down, so price going down fast. So it's going down gently, gently, and then here it is, it gap down to this level. We highlight the beginning of the gap and the end of the gap, and then we highlight also the 138.2% Fibonacci extension of the gap. What we are looking for, because this is a continuation gap, we are looking for something like this, price finding a resistance below the 138.2% Fibonacci extension level of the continuation bearish gap. And from there, we use a top-down trading method to trade it, because there's a high chance that the price may continue to go down because it's a continuation gap, and the gap will take some time before the gap is filled. It makes sense? It is also powerful. If you want to know more about a different type of trading gap method, go to www.dayprotrader.com, click on Trading Gaps Methods. We are the TSTW24 traders talking about trading gaps, method 2. If you have not watched method 1, search for it and watch it so you may understand, okay, how to trade gap. Method 1 is about trading speculative gap and exhaustion gap. Method 2 is about trading, okay, all right, continuation gap. I invite you now to follow me and watch the third part of this series of videos about trading gap methods, free. See you in a video free, Trading Gaps Method 3. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.